Mortgage insurance. Did you just watch my video on buying down your interest rate? If you didn't, I'll put a link below in the description, and I'll also post it at the end. But watch this one all the way through the end for a great money saving tip. Mortgage insurance is insurance that you may be required to pay on a loan if your down payment is less than 20% of the purchase price on the home. This insurance is typically required on FHA and USDA loan. By the way, I'm Alison Harris with NextHome Family Tree Realty, and I'm a realtor in Solano County. I'm not a lender, but I do know a lot about real estate. Mortgage insurance is required by the lender as it lowers the risk to the lender who's making the loan to you so that you can qualify for a loan to purchase a home that you might not be able to get otherwise. Mortgage insurance isn't for you, although you paid for it. It's for your lender. It protects them in case you default or fall behind on your loan payments, which could cause your credit score to suffer because they're going to report it, and it could cause you to lose your home through foreclosure. The easiest way to explain this is it's like gap coverage when you purchase a brand new vehicle. And most people have bought gap coverage or been offered gap coverage, except this one's mandatory. If you have a conventional loan, then your lender may arrange for private mortgage insurance, also known as PMI. These rates vary by down payment and credit score, but are generally cheaper than FHA rates for borrowers with good credit. If you get a FHA loan, one through the Federal Housing Administration, then your MI or your mortgage insurance premiums will be paid to the Federal Housing Administration, also known as the FHA. The FHA loans are required for all of them to have mortgage insurance, and the cost remains the same no matter what your credit score is. There is, however, a slight increase in cost if your down payment is less than 5% on an FHA loan. The FHA loan has upfront costs to the mortgage insurance as well as monthly costs that are included in your mortgage payment. Great news if you're a veteran though. If you use a VA-backed loan, as the VA guarantee replaces the mortgage insurance and functions similarly. This means there's no increased payment. However, you'll be paying a funding fee that varies, and that's included in your loan. But if you're a VA, thank you for your service to our country, and this is one of the ways that they give back. Can you get rid of your mortgage insurance? You sure can, but you need to review that with your lender, as each loan is different. Some lenders will review them, and once you have 20% paid off of the purchase price of the home, it'll drop automatically. Others drop at 2 years, and some don't drop unless you call and request a new appraisal, and you have to pay for that appraisal. For the past few years, as home prices have increased, I've called my clients multiple times, updating them on the values of their home and encouraging them to call their lender, find out if they can get rid of their mortgage insurance or refinance. Some of them were able to do this by calling, others had to have a new appraisal done, and others refinanced, grabbing a super low interest rate at the same time and then saving themselves $500 to $1,000 a month on their payment. Several took that extra money and they're paying it towards the principal on their home to get their home paid off faster. Others needed it for something else. What could you do with an extra $200 a month? Did you know that when you're writing an offer to purchase a home, your realtor can ask the seller to pay for your mortgage insurance? The amount will vary, and it's important that your realtor talk to your lender and find out how much that mortgage insurance is to purchase it outright. Once your realtor has that information, they can write it into the purchase contract requesting the seller to pay for this at close of escrow. This can save you hundreds of dollars a month and is always worth the ask, especially in the market that we're in today. By the way, it's July 2022. Once the mortgage insurance is paid in full, it's gone for the life of the loan. And to me, this is a better option than buying the mortgage interest rate down, as we discussed in a prior video. What would you do? Would you rather have your interest rate bought down or your mortgage insurance gone forever? Let me know in the comments below. And remember, I'm Alison with NextHome Family Tree Realty. If you have questions on real estate, need a great lender, need to know where you can go for something, let me know. I'm happy to give you that referral. Just post it in the comments below or send me a message at 707-365-2563, and I'm happy to answer all of your questions. Remember, I'm the realtor who's been rooted in Solano County for over 40 years, and I'm here to serve you with your real estate needs. See you next time.